Okay, so now we go on to the weighted average method. Now remember, we're still in the perpetual method, which means that at every point in time, we're gonna stop and do a different calculation or something like that. So for when weighted average comes into play, and I just abbreviate that WA, weighted average tells us that we don't want multiple levels. We're not wanting to keep this separate. We don't want to have to keep up with a $7 level and then an $8 level and so on and so forth. No, we want to do away with that. So at every purchase, what we're going to do is we're going to stop and do an average. Okay, here we made a purchase on October 3rd. All right, so because of this purchase, we need to do a weighted average right here. All right, the way that we do a weighted average is we take and we add up the total number of units, which here is going to give us 40 units, right? And then we add up the total cost here, which is going to tell us 70 plus 240, that's going to be 310, right? So the total number of units, the total cost, we won't add up the total cost per unit because this is a weighted average, so we want to multiply those out. And then we take the 310 divided by 40, and that gives us a weighted average cost of $7.75 per unit. Okay? So at every purchase, every time we have a purchase, we're gonna do this. So at each one of these purchases, we're going to stop and do another calculation to calculate the weighted average. All right, so from here, our goal is to figure out what our cost is. All right, so at this point we have calculated our weighted average, and therefore we can take this dollar amount and multiply it by the number of units that we sell. So on October 4th, we sold 35 units. Our cost per unit now is going to be $7.75. And so that tells us that our cost is going to be $271.25. All right, and of course I do not have this memorized because as much as I'd like to call myself a math genius, it's just not the case. So I am looking down at my notes to get the calculations. All right, so this is going to be our cost for this method, okay? So our cost is going to be there. When we get down and we want to calculate our ending inventory, first we have to kind of pause and do a little another calculation. Previously we had 40 units available at this $7.75. Well, we just sold 35 of them. So how many do we have left? We have 5 units at $7.75, right? Well, we purchased 10 units at $10, right? And so if we take that, we add it out, we total that up, we would get 5 times, let's see if it's on here. Yeah, we would take it and multiply it out, and we would be able to get another weighted average to figure out what our ending inventory is going to be. And I don't have that calculation in front of me, but this is how you would get the ending inventory. All right, so that is how you do weighted average. The thing to remember with weighted average under the perpetual method is to make sure that you stop and do another weighted average calculation at every time you make a purchase. All righty.